Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So it was a rough week for mortgage-backed securities and long-term interest rates, but just maybe we found a bottom. They say that the old saying goes, the cure for higher rates is higher rates. So at some point, there's enough yield out there to attract new investors. So let's see where we are on a Thursday. We're down 12 basis points in mortgage-backed securities. You could see here yesterday's bottom. We hope that this holds, right? These candles, like this candle over here, suggest that after a downtrend, this trend, the previous trend, is at risk. And so we watched prices before drop to the 200-day moving average. You got a weird-looking candle with an upper and lower wick, and that created a rally higher in prices and lower yields. Then we have another sell-off, and the sell-off ended yesterday with this candle with a long lower wick. Today we're seeing a longer lower wick. I'm hopeful that this hopefully is a turnaround, but it's something you need to watch very, very carefully, and it's day to day. At the same time, the 10-year note yield beneath 134 is an important number. Watch that with you and your clients. If we get above 134, I think the yields are going to get different in a hurry, probably going to approach that 150 mark very quickly. Now, this week, a couple of things. Retail sales, huge retail sales number. It was 5 times better than expectations. Why? Well, there's no stimulus better than reopening economies. And so it feels like COVID is starting to loosen its grip. Vaccinations are starting to go out in mass. People want to spend. There is an incredible pent-up demand. And what I'm looking at is that we still have states like New Jersey, like New York and California still mainly closed on a lot of levels. And they make up, goodness, almost 20% of our economy. Can you imagine when these states reopen, and they're starting to now? Second half of 2021 is going to look good, but it's coming with an expense. And one of those expenses is inflation. And that's one of the big reasons why rates are ticking higher. And it's something that you need to share carefully with your clients, because we're seeing it in things like lumber, where people are actually starting to walk away from new home purchases because of that escalation in lumber, right? They sign a deal, sign a contract, in several months they agree to take the home. And if there's any additional expense related to lumber or materials, the buyer's on the hook for it. And so buyers are looking a couple months down the road, when lumber is now up 170% in the last 10 months, and saying, no, I can't do this. And they're walking away from deals. And so today we also had a housing starts number, which is, how many shovels are going in the ground. And the number was a complete miss. And so one number doesn't make a trend, but if builders are not willing to absorb the cost of higher lumber, they will be resistant to put a shovel in the ground. So it's something we need to watch in future readings. Hope this finds you well. Be safe. Have yourself a great weekend. We'll talk to you soon. Bye for now.